Welcome to the first Disruptor Series video of 2024. My name is Colin Lambert and I'm delighted as always to be joined by LMAX Group CEO David Mercer. David, nice to see you.
Good to see you, Colin.
Happy 2024.
And to you, good to see you back on these shores.
Yes, wish it wasn't February, but there you go. David, I guess what I wanted to cover today was, there's been quite a lot happening since we last sat down and spoke. For once I thought I'd start on the crypto world because obviously with the Bitcoin ETFs was probably the headline news of the last 3 months. What was your view of how it played out and how do you think it plays out from here?
It probably played out exactly as you'd expect as a dyed-in-the-wool spot trader.
Buy the rumour, sell the fact.
100%. So the market popped actually when there was that erroneous leak on Twitter. Now Bitcoin popped up to 48 past 50,000. And then actually when it became reality, it's now idled around the low 40,000s since then. So look, I think we're going to step back a little bit. The crypto evangelists were saying this was a game changer for crypto, certainly for Bitcoin. But it's going to take time for those ETFs to be successful if they're going to be successful. As we sit here today, there's been $7 billion of inflow into those ETFs. That's nothing. Yeah. Right? There's also been outflows of 5 to 6 billion, depending when you watch this because of the Grayscale trust issue. So if you look at that, the market cap of crypto today is $1.5 trillion. So $7 billion in is nothing. Now, if we get $1 billion a week going in after a year and you've got 50 billion in, well, it suddenly gets closer to, it's not quite a percentage point, but all of a sudden you can see this being relevant. The idea of the ETF is that it democratizes that asset class. It becomes easier for everyone to access it. Potentially, hedge funds, asset managers, family offices have access to a product they didn't have before. I would say, speaking to the evangelists, they'd be surprised at how mooted the uptick has been. Yeah. My personal viewpoint is that crypto assets today, and that's really Bitcoin and Ethereum, should form part of your portfolio. If they form a part of your portfolio, it's probably in the region of 2 to 5%. There are $200 trillion of assets in the world today. So that means 2% would be $4 trillion, 5% would be $10 trillion. The value of crypto assets today is 1.5 trillion. Yeah. So it should be a bullish move long term for that asset class, but it would seem that no one's rushing for the entry point. So I think it's played out as we'd expect. For that asset class, it is better because you have more groups, more segments of the market able to access it. But let's see how they succeed in the medium term and long term. What I would say is, if you wanted to buy Bitcoin today, it's actually just cheaper to enter the spot market. Yeah. Right? Yeah. It's still quite expensive to do it via an ETF. But I think it's good overall for the market. I think it brings together traditional finance and crypto. But crypto itself is very limited. It's really 2 products and 100 odd coins that are casino chips. Yeah, I mean, something we've discussed before in these videos is the need for the market structure to evolve to really get these institutional investors on board. Has it accelerated that process in any way? Or is it really just we're still stuck where we were? There's just a new product on the street? I think it's closer to the latter. Now, if you listen to potentially the most important man in capital markets, who runs the biggest asset manager in the world, he thinks that ETFs in general are the product to democratize markets and the products that everyone should trade. So, for example, you trade a gold ETF rather than trading gold. It's quite difficult to trade all the assets that we're aware of on the street today. I mean, market access has always been the challenge. So ETFs arguably make that easier. I think, though, in terms of market structure, maybe the disappointing part is that everyone still thinks along TradFi lines. Yeah. So what do you talk to banks for? Ultimately, credit, clearing, and custody. That's still the same, actually, in these crypto assets. But the one difference is you're not using banks, right, for credit, custody, and clearing. So you could argue, if you follow that TradFi trade process, that actually all you've done is reduce your credit quality, right? So you're using that well-known listed crypto exchange as your prime broker, as your custodian, and to settle your trades. That may not be a good thing for the market. I still think that we need the bigger players to come in and provide their traditional services. And I think they will, but it hasn't happened. As we sit here in 2024, it hasn't today. So I'm not going to tell you that market structure has improved greatly.
No, I mean, ultimately, there's still a trust thing, which I find the most ironic of all of it. The trustless asset class needs trust and needs institutions that are based around trust. Whether they are trustworthy or not, we can discuss another time. But they are needed, aren't they, before we can really push on?
Well, I think it goes back to the first C of the 3 C's: credit. Traditional markets trade on credit. Your moms and pops on the street, we trade on credit. Right? We all think we make instantaneous payments. No, the bank has given us credit. This is why you have to do a credit check before you get a debit card. So, and that credit mechanism is, you have to make a much bigger leap. And the world hasn't made that leap yet.
No.
So smart contracts, which are apparent in the DeFi world, actually literally eliminate credit risk, but they don't eliminate credit. The need for credit. So today, because we're following, if we go back to the previous answer, if you go back to mirroring the TradFi processes, well, they're just layered credit upon credit. And now you're saying, well, okay, let's go into this new asset class, but you still need credit. Like, who funds the trade? Who goes first? And you haven't got, bringing some FX into this, you haven't got CLS, right, the biggest credit provider really in the world, at the end of the street saying, that's all good, now we settle, and we've eliminated her stat risk. The only way to eliminate her stat risk in crypto is to move to these smart contracts. The world hasn't done that yet. So we're actually, I would argue, just using a worse form of credit today in crypto than we have in TradFi.
And counterparty risk goes across everything and always will do, I guess, won't it? Even in the DeFi world. So how has this played out then for LMAX Group? And maybe we can now start talking about FX. Bring me back on the safer territory. But how has it played out in 2023 for LMAX Group?
So look, very much for LMAX Group, I think we have to have now a medium to long-term strategy, and that's across all our assets, right? And I have 3 real brands: LMAX Exchange, which is the FX exchange product everyone's aware of; LMAX Global, which is probably one of the leading B2B brokers in the world across all assets. Then you've got LMAX Digital, which is our crypto operation. So the way I look at the future is that the group needs to be relevant to all segments. The group needs to be cognizant of what the future might look like when those markets become intertwined. So for 22 and 23, it's actually quite difficult for us. We had to keep investing for that future. I've doubled my headcount at LMAX since 2021. Last year we added 20% of the headcount, but the market suggests that I shouldn't do that. So all my KPIs were reasonable in 23.
Has that ever stopped you before? The market suggesting?
A little bit. Well, what the market suggests is because we're self-financing. We always have been. I've never raised primary capital. So it basically limits the amount we can invest. Because we had good 2020s, good 2021s, we had more capital to invest. But at the time, a large part of that investment was investing in a multi-asset future, which involves tokenization, which involves crypto. Now in 2022, the market was saying crypto's going to go to zero.
Yeah.
So we kept plowing ahead. Likewise, when I go back to our core product, our bread and butter that still pays most of the bills, which is foreign exchange, and on the LMAX Global side, the margin FX trading, we started to have to try and diversify that offering. There's only so long, I've been talking to you for a long time, Colin, that we can just be a spot central limit order book.
Yeah.
So I think the way I'd characterize 2023 was investing for the future and making sure that our core businesses performed. So what did we do? We applied and received the NDF license in Singapore. I built a bigger office in Singapore. I built greater distribution capabilities, mostly in foreign exchange, but also across the digital asset class. We bought Curex in the fourth quarter of last year. Curex, similar style to us, a spot central limit order book, but targeting an asset manager segment that I've previously made no segue into. Now they are that segment is much sought after in foreign exchange, and we've never been able to target it. So we needed to open ourselves up to that one last remaining segment, if you like. We've always had brokers, we've always had banks, we've always had hedge funds, we've always had PTFs, never had the asset managers. I get their flow, but by virtue of being connected to executing bank brokers. So that was really it. So building geographic distribution, greater segment distribution in terms of that Curex acquisition, and greater product diversity, of course in crypto, but in FX, starting with NDFs. And that can't be the finish of it. I'm very well aware that in order to be relevant to the biggest names in foreign exchange, we need to offer more than just a spot central limit order book. And that becomes more apparent the more you speak to the asset managers.
Yeah, I mean, it's the way the world is turning, isn't it? It's probably been one of the bigger trends I've observed in the last 3 years, is the rising importance of that asset manager community. They've always been there, but actually, were they really taken seriously by platforms? Probably one or two.
Well, it goes back to the credit again. I mean, ultimately, I used to have very good meetings with them, but I wouldn't be that relevant.
No.
Right? Because they'd say, okay, what are you doing? Are you doing spot majors for us? Yeah, but all my prime brokers do that for us, right? What about NDFs? What about swaps? Hey, can you talk to us about crypto? So suddenly I was like, okay, I need to be able to have those conversations with them and persuade them that perhaps there's a different way they can execute.
Yeah.
But then again, we don't know everything. We don't know everything yet. I mean, there's still some of the biggest shops on the street are using RFQ to execute. I don't have RFQ here, but guess what? We'll need to build it.
Yeah.
RFS, still being used a lot. Now, the evangelist, the David Mercer exchange evangelist of 2015 is just going to have lost that argument, because I would have said to you in 2015, it's impossible that this would exist in 2024. Guess what? I was wrong. So we're going to have to be pragmatic, and we're going to have to solve more problems, still around our bread and butter of execution, but solve more problems for every segment of the market.